Hi guys, this is Nikki, also known as Facelesstrader, and you are watching the Awesome10X. These are the top reasons why people don't go in a global stock market. People think that it is too risky. In my view, people have missed opportunities because they think it is risky, and that ignorance is actually expensive. Would you say that a person who invested in Apple and Amazon in year 1997 and year 1980 were actually risky? In a way, you'd say that it's a little bit risky during that 1990s era, but is it truly risky around year 2005 and 2010? My view of risk has to do with the owning of a company, of a business. In my view, risk is a function of the knowledge of that business model. It might not have been clear to you that Apple and Amazon were great investments for your money, whether you knew it 1997 or 1998 or year 2000. I'll just give to you a semblance of what you've missed out on. $1,000 invested simply in Amazon and Apple would have yielded $1.5 million each. You've heard me right. 1,500x. That is a life-changing number, and it actually started with just $1,000. Of course, in that span of about 20-30 years, for Apple, that was about 40 years time, 1980 to 2020. That move happened with the advent, of course, of the smartphone era, the PC era, the iPhone era, the iPods, the iPads, all the things that you now use. And of course, for Amazon, it started initially by just selling books, and eventually it went selling everything, and then from e-commerce, they went into almost Amazon everything. Brad Stone wrote about Amazon, the everything store, because they've got Amazon Web Services, which is now contributing 50% of their net income. What I'm saying here is that a business transforms, evolves, and evolves in such a way that risk is actually a function of how much you know this company or how much you don't know about this company. So I think the viewpoint of most people on why they don't want to invest in anything is simply a function of whether they know what they're participating into. So consider the following. You may disagree or you may not disagree with me, but I think that around 2010, it was very clear for most people that e-commerce was a very definitive secular trend. Meaning, in 1997, it wasn't clear that you were gonna shop online, primarily because there wasn't a smartphone yet. Smartphones became more penetrating around 2007 onwards. So 10 years prior to that, even before Amazon was creating their online store, not everyone had access to the internet. Remember the dial-up days? So it was a function of the infrastructure per se. When internet infrastructure flourished, when mobile penetration flourished, when PC, like laptops and mobile phones became cheap to acquire, online shopping and online anything became more common. And because of that, it was easy to adopt for most people to shop something online. Now, similarly, if you think about it, in this world, do you think that the penetration rate in Southeast Asia is as high as the US and China? So even today, at about 5.5 billion people connected into the internet, the Philippine population, the Southeast Asian population, actually just grew their penetration rate from about 1% to 3%, and that acceleration happened primarily because of COVID pandemic. So in my view, when we invested in C Limited, which is the owner of Shopee, which is actually a very common online shopping for most Filipinos out here and most Southeast Asians, it was almost an inevitable reason for all of us to make money from. So with that, in my view, when people ask me, why do people not participate in global stock markets? I think the reason is just a function of knowledge. They have no idea about the bigger risk, which is not investing in the greatest companies in the world.